Hello friends, today's topic is BEPS Action Plan number 13, which is re-examining transfer pricing documentation. Herein, we will understand what are the standards recommended by OECD for transfer pricing documentation, for improving the transfer pricing documentation, what are the action points for tax administrators of the member countries, what are the action points for the taxpayers, and what are the corresponding India tax provisions introduced in the Indian Income Tax Act for transfer pricing documentation related to transfer pricing documentation. So friends, BEPS Action Plan 13, re-examining the transfer pricing documentation. Herein, OECD has recommended to revise the existing transfer pricing documentation in order to counterattack BEPS. In order to remove the effects of BEPS, here the documentation is in the form of master file, local file, and country by country reporting. At the time of studying transfer pricing, chapter number 1 of the international taxation, you have come across the documentation part wherein you have come across these three concepts of master file, local file, and country by country reporting. I will reiterate that what are the provisions as per OECD in this. So master file is nothing but re-examining the transfer pricing positions wherein the taxpayer will be required to report its transfer pricing positions in the master file as well as company's business operations. In the local file, transaction by transaction reporting is to be done for each and every group members of the MNCs. So master file is related to transfer pricing positions and business operations, whereas local file is related to transaction by transaction analysis, which includes how have you derived at the arm's length price, what are the transfer pricing methods, basically a transfer pricing report you can say, which is required to be documented for each and every transaction conducted by the group members of MNCs. This is local file. Then last is country by country reporting, wherein on an annual basis the MNC is required to report in a template the MNE's group indicators, what are its profits, what is its revenue, what are the taxes paid by the MNC. So country by country reporting is an annual template which is to be submitted by the MNC in its residence country with reporting of economic indicators, which includes revenue, profit before tax, income taxes paid, and so on and so forth. So these are the types of documentation which a taxpayer will be required to submit either in his country of residence or in the respective jurisdiction of its group members. And the documentation is nothing but the transfer pricing positions at a global level, the economic indicators of revenue, profit, taxes paid, as well as what are the transfer pricing methods involved, how have you arrived at arm's length price. So these are the documentation which is required by which is required to be disclosed by the taxpayer, which has been recommended by OECD. And the advantages of such a documentation is for the taxpayer, articulating the transfer pricing positions in a document will help them to proper maintain the document, and that will be handy at the time of audit of the transfer pricing provisions. So the taxpayer gets a handy document in the form of documentation. What are the transfer pricing positions globally, and transfer pricing related documentation wherein the methods involved, the derivation of ALP will be properly maintained. The taxpayer will be able to properly maintain these documents. And for the tax administration, this will be useful to understand the business operations, to understand the transfer pricing positions, to see if there is any possibility of BEPS, and if there is any possibility, then audit can be conducted by the tax administrators at a relevant point of time to avoid BEPS. So these were the advantages for the taxpayers, for the tax administrators. Having said that, let's read clause by clause on the screen. Action Plan 13, Re-examining transfer pricing documentation. Revise standards for transfer pricing documentation, incorporating a master file, local file, and a template for country by country reporting of revenues, profits, taxes paid, and certain measures of economic activity. So friends, master file, local file, and country by country reporting template, and reporting of revenues, profits, taxes paid, and certain measures of economic activity. Wherever the economic activity has been generated, wherever the value creation has been generated, this is how the allocation should be done. The allocation should be done. The allocation of revenue, the allocation of profits should be based on economic activity, should be based on value creation activity. Taxpayers advantages. So these 3 pointers are for advantages to the taxpayers, to the tax administrators. First point for taxpayers. Taxpayers will be required to articulate consistent transfer pricing positions in the documentation. Tax administrators would get useful information to assess transfer pricing risk. Tax administrators would be able to make determinations about where the resources can most effectively be deployed, and in the event audits are called for, provide information to commence and target audit enquiries. So it is more useful for tax administrators to scrutinize transaction and conduct audit if at all required. So friends, last 3 bullet points are nothing but advantages of the BEPS Action Plan number 13 recommended by OECD. Requirements as per OECD report. The OECD report provides for revised standards for transfer pricing documentation in the form of master file, local file, CBCR reporting, country by country reporting, and a template for country by country reporting of income, earnings, taxes paid, and certain measure of economic activity. This is what we have already discussed. 3-tier structure mandated by BEPS. The BEPS report recommends that countries adopt a standardized approach to transfer pricing documentation. It mandates the following 3-tier structure. So suggestion of master file, local file and CBC are the purpose being all the taxpayers report the documentation, maintains the documentation in a standardized form. So this documentation are applicable globally at a global level. So the recommendation is that countries should adopt a standardized approach to the documentation. And the standardized approach is nothing but master file, local file, and country by country reporting. Master file, standardized information relevant for all M&E group members. So first is standardized information. MN is to provide tax administrators with high-level information regarding the global business operations and transfer pricing policies. So information is regarding global business operations and global transfer pricing policies, which are to be documented in the master file. The master file is to be delivered by MNEs directly to local tax administrators. In India also there is requirement of master file. So delivered to local tax administrators by the MNEs. Local file requires maintaining of transactional information specific to each country in detail. So transactional information which is specific to each and every group member of the company of the MNC is required to be maintained in detail, which covers related party transactions and the amount involved in those transactions. It may be termed as another term for transfer pricing report, transfer pricing study report, which is maintained by the company in the respective country. So related party transactions. In addition, relevant financial information regarding specific transactions, a comparability analysis and analysis of the selection, application of the most appropriate transfer pricing method should also be captured. So most appropriate transfer pricing method is required to be obtained. So addition requirement is financial information regarding specific transactions, comparability analysis, comparables are to be analyzed, which is if you document in the transfer pricing report as well. What are the comparables? First of all, what is the transaction? What is the related party transaction? Whether is it with associated enterprise or not? Once it is determined that it is an international transaction, it is between associated enterprises, then comparables are determined based on various methods available. Comparables are to be determined, then selection of most appropriate method. This is what is supposed to be documented in local file as well. The local file is to be delivered to the local administrators, the local tax administrators of the respective MNEs. So local tax administrators of the group members of the MNEs, that is where the report is required to be submitted. So friends, till now, master file and local file. Master file is nothing but documenting global business policies, documenting global transfer pricing policies of the MNE with the local tax administrator, as well as local file is nothing but another term for transfer pricing study report. Document the related party transaction, document the comparables, and document how have you arrived at ALP and selection of most appropriate method, most appropriate transfer pricing method. Country by country reporting. It is a template to be submitted annually by the MNE in its residence country, mentioning the key economic indicators, which is nothing but revenue, profit, taxes paid, and other economic activity and other value creation activity. The BEPS Action Plan 13 report provides a template for MNEs to report annually for each tax jurisdiction in which they do business, the information set out therein. So a template to be reported annually for each tax jurisdiction. This report is called as CBCR, which is nothing but country by country reporting. To facilitate the implementation of CBCR, Action Plan report includes a reporting implementation package which consists of, so there is way of reporting CBCR. First is model legislation which could be used by countries to require ultimate parent entity of MNE group to file CBCR in its jurisdiction of residence, including backup filing requirement, meaning a model legislation. The word model legislation which can be used, a model template which can be used by the ultimate parent holding company of the MNE group, which is supposed to be filed in the country of residence of the ultimate parent holding company as per the model legislation, as per the model template. And 3 model competent authority agreements that could be used to facilitate implementation of CBCR, respectively based on multilateral convention on administrative assistance in tax matters, bilateral tax conventions, and tax information exchange agreements. So 3 pointers over here: administrative assistance, bilateral tax conventions, and tax information cut start and tax information exchange agreements based on 3 model competent authority agreements. CBCR filing can be done, and CBCR filing is nothing but once you upload the template, there will be sort of automatic sharing of information amongst the tax administrators of the respective countries. You can see 2 countries. For example, let's take an example of 2 countries, US and India. US is the ultimate parent holding company, and in India the subsidiary company are there of the, which are the group members of the MNE are there in India. So CBCR will be done by the ultimate holding company in US, and once a template is submitted in the form of model legislation, in the form of 3 model competent authority agreements, which is part of implementation package of CBCR, once it is submitted, once it is uploaded, then the same through an automatic system, the same will be exchanged between US and India. So only the relevant country will be able to see CBCR. If in case of, you can say in case of extreme circumstances, in case of audit of the particular entity, then this information will be exchanged between the tax administrators of the respective countries. So intention is exchanging of information to curb BEPS effects. So friends, CBCR template, annual template for each tax jurisdiction to be submitted by ultimate parent holding company in the country of residence, and 2 pointers for implementation of CBCR implementation package of CBCR we have discussed. Following information are required in the CBC report. Information relating to global allocation of MNE's income and taxes paid. So global allocation of income and taxes. Indicators of the location of economic activity within the MNE group. So economic activity, what are the indicators where the value has been created, where the economic activity concentration is to be reported. CBC report requires MNEs to provide an annual report of economic indicators, which is nothing but revenue, profit before income tax paid and accrued in relation to the tax jurisdiction in which they do business. So for each and every jurisdiction, these pointers, economic indicators are to be reported in relation to the tax jurisdiction in which they operate. CBC reports are required to be filed in the jurisdiction of tax residence of the ultimate parent entity, in an example US, being subsequently shared between other jurisdictions through automatic exchange of information mechanism. So as we had discussed earlier, the information is shared between the jurisdiction of the group members of MNE, whatever has been reported in CBCR. So to be filed in the jurisdiction of tax residence of ultimate parent entity and subsequently shared between the jurisdictions of the respective country of the group members of MNE. So friends, we have studied 3 pointers for transfer pricing documentation: master file, local file and CBCR. These concepts are very much These concepts are very much relevant from the India chapter as well, and accordingly, after understanding the background, what are the OECD recommendations for revising, for re-examining the transfer pricing documentation and the purpose behind it, now let's come to the India chapter. What are the action taken by the government of India in line with BEPS Action Plan number 13? Transfer pricing provisions under the Income Tax Act, they are appearing in chapter 10 of the Income Tax Act. Sections are 92 to 92F. Section 92D requires maintenance of prescribed information and document relating to the international transaction and specified domestic transaction. So the documentation part is covered under section 92D of the Income Tax Act 1961. Also, a constituent entity of an international group is required to keep and maintain the prescribed information and document in respect of the international group. So an entity which will represent the MNE in India, such an constituent entity will be required to report the maintenance documentation, will be required to document the reporting requirements of OECD in India if applicable. So the constituent entity of the international group will be required to keep and maintain the prescribed information and documentation in the respect of the international group. So the constituent entity is the term which has been specifically used in the India tax provisions, which is supposed to report documentation of master file, local file, CBCR as applicable. Implementation of international consensus in India. So in line with international consensus, for the purpose of implementing the international consensus, a specific reporting regime in respect of CBC reporting and also master file has been incorporated in the Income Tax Act. You can say CBC and master file has been incorporated under the Income Tax Act, and the relevant section are 286 for CBCR and 92D for documentation, for maintenance of documentation of transfer pricing related policies. So friends, 286 is related to CBCR reporting and 92D is related to master file reporting requirements, which has been recommended by OECD. Both these sections we have covered in detail while studying chapter 1, transfer pricing provisions. So we need not cover again in this portion. However, it was relevant that we mention over here the section number and the relevant India tax provisions which has been introduced in line with BEPS Action Plan number 13. Threshold limit of consolidated group revenue for applicability of CBCR. The CBCR reporting requirement is required to be reported only if the consolidated revenue of the M&E group exceeds a prescribed limit. In India, the limit is, as we have studied, the limit is 5,500 crores for the applicability of CBCR. Also, there is a threshold which is internationally accepted, and the India tax provisions are in line with international consensus, wherein the threshold limit is euro 750 million. If you try to convert that in INR terms, approximately you will get that 5,500 crores is the limit, which is being derived from the international threshold limit. So friends, threshold limit of consolidated group revenue for applicability of CBCR. CBCR for reporting year does not apply unless the consolidated revenues of the preceding accounting year of the group based on the consolidated financial statement exceeds a threshold to be prescribed. So this is to be done for every reporting year, and it is to be done, the threshold limit is to be computed based on preceding accounting year based on consolidated financial statement of preceding accounting year of the M&E group, and it should exceed a threshold to be prescribed. For international consensus, threshold limit is euro 750 million, equivalent to local currency is the international consensus. In line with the international consensus, these thresholds under section 286 read with rule 10DB of the income tax rules is 5,500 crore in India for the applicability of reporting of CBCR requirement. So friends, this concludes BEPS Action Plan 13. Herein we have concentrated on the OECD recommendations and corresponding India tax provisions which revolve around master file, local file and CBCR reporting. What are the OECD recommendations therein regarding the documentation, as well as the advantages to the taxpayers, and more advantages goes to the tax administrators where such a documentation has been prepared and maintained by the group members of the M&E group. So friends, this concludes BEPS Action Plan number 13, which is re-examining of transfer pricing documentation. Thank you.